Students, lesson number 7. This is new to you again. It's called consumable items. What are consumable items? Sometimes an asset may be so small that you may have an opening stock of it, you may have a closing stock of it, and some of the items you may have consumed during the year. Now, what to do in these consumable items? Before I explain that, let me give you example of consumable items. Stationery, bats and balls. They are also called sports goods or sports material. Remember, it does not include sports equipment because equipments are assets. So, stationery, bats and balls or sports goods, sports materials, medicines, and other examples are there. Now, how to treat them in not-for-profit organization? Stationery is so small that they come and go. We can't keep them as assets also, pure assets, and we can't keep them as pure expense. So it's a combination of both assets and expenses, and they fall under the category of consumable items. Now, these items go everywhere. I teach them like they go everywhere. If there is an opening stock, it will go to the balance sheet in the beginning of the year. If there is closing stock, it will go in the balance sheet at the end of the year. And very, very important, consumption will be calculated and it will be treated as a revenue expense. Normal annual expense is consumption. So remember, consumable items, what are those? Stationery, bats and balls, sports goods, medicines. There can be more examples. Now, what is the treatment? Opening stock of these assets will be shown in the balance sheet in the beginning of the year, closing stock at the end of the year balance sheet, and consumption will be calculated and shown in the income and expenditure as an expense. This is important. Now, very, very simple calculation of consumption. There are two formulae. One is based when purchases are given. What is the formula? Opening stock plus purchases minus closing stock. This will give you consumption that will be shown in the income and expenditure on the expenditure side. But if payment to creditors is given, purchases are not given, so will you start with the formula as usual, opening stock plus payment minus closing stock. Then we will add creditors at the end, advance to the creditors in the beginning. Creditors in the beginning will be subtracted and advance at the end also will be subtracted. Once again, I am telling you, what is this? These are two formulae for calculating consumption. This is used only for consumable items. The two formulae, if purchases are given, then no adjustments are done for creditors or advance payment. It will be a simple formula of opening stock plus purchases minus closing stock. This is your consumption. But if payment to creditors are given and purchases are not given, then we will use the formula opening stock plus payment minus closing stock. This is actually giving you purchases and then you are adding creditors at the end. You are adding advance in the beginning, subtracting creditors in the beginning, and also subtracting advance at the end. So this is the formula. These two are formulae for calculating consumption. This is very important. Very short video I've given you. Go through it. Simple, sweet topic I've taken today. So we'll do a lot of practice on this also. And after today, we are starting with a full-fledged question. So please go through the previous videos, practice questions in parts for subscription, for fund-based accounting, for consumption, and then we'll very soon start with full-fledged question. Thank you.